Welcome back to Boni's Life, the only place where we cut through the noise, ignore the hype, and look at the raw, unfiltered data to figure out exactly where the market is heading. If you are a short-term scalper, a mid-term swing trader, or a long-term diamond-handed investor, you are in the right place. Today, we are diving deep into the current state of the crypto market. We are going to analyze the technicals, the fundamentals, and the global macroeconomic events that are moving the needle right now. And yes, we are going to talk about what President Trump is expected to say tonight and how it could send shockwaves through your portfolio. So grab your coffee, pull up your charts, and let us get into it. Let us start by looking at the big picture. As of right now, the total cryptocurrency market capitalization stands at $2.44 trillion. That is a 2.3% increase over the last 24 hours. We are seeing a 24-hour trading volume of $118.47 billion across spot markets. Bitcoin is currently dominating the market at 56.2% on CoinGecko and 58.09% on CoinGlass, while Ethereum holds 10.5%. Bitcoin is trading at $68,503, up 1.5% on the day, but down 4.4% over the week. Ethereum is sitting at $2,125, up 2.2% today. Now, these numbers might look like a slight recovery, but do not let the green candles fool you into a false sense of security. We need to look under the hood. When we look at the derivatives market, things get very interesting. According to CoinGlass, the total open interest across all exchanges is currently at $107.79 billion, which is up 1.52%. Bitcoin alone accounts for $48.58 billion in open interest, while Ethereum carries $30.18 billion, up 4.14%. The 24-hour futures volume is a massive $198.44 billion, up 7.85%. But here is the kicker. In the last 24 hours, we have seen $330.81 million in liquidations, up 17.77%. Bitcoin liquidations alone totaled $97.81 million, and Ethereum saw $88.52 million wiped out. The long-to-short ratio is almost perfectly split, with longs at 50.48% and shorts at 49.52%. This tells us that the market is incredibly indecisive right now. Traders are placing bets on both sides, and the market makers are happily liquidating their over-leveraged positions. If you are trading with 50 times or 100 times leverage, you are not a trader, you are a liquidity provider for the whales. Now, let us talk about market sentiment, because this is where it gets really fascinating. The Fear and Greed Index is currently sitting at 25, which puts us in the fear zone. However, this is actually a significant improvement. Just a few days ago, on March 30th, the index hit 8, which is extreme fear. In fact, we were stuck in extreme fear for 46 consecutive days. Moving up to 25 means that some of the panic is starting to subside. But we are by no means in a bullish euphoria. The CoinGlass specific Fear and Greed Index still reads 7, indicating extreme fear in the derivatives market. This divergence between spot sentiment and derivatives sentiment is a classic sign of a market in transition. The spot market is cautiously optimistic, but the derivatives market is still terrified. When you see that kind of divergence, it usually means a big move is coming. The question is, which direction? So, what type of market are we currently trading in? Based on the data, we are in a high volatility consolidation phase with a bearish underlying structure. Bitcoin has been trapped in a tight range between $66,218 and $69,135. The momentum is weakening beneath that 69K resistance level. The relative strength index, or RSI, is at 48, which is perfectly neutral. The average RSI across the market is 52.48, also neutral. The stochastic oscillator sits at 33 and the commodity channel index is at negative 49, both confirming the lack of directional bias. The MACD is in negative territory at negative 747, and the average directional index, or ADX, is at a very low 15, indicating a weak trend. We are not in a clear bull market and we are not in a free-fall bear market. We are in a chop zone, a meat grinder that is designed to chop up impatient traders. And if you have been getting stopped out repeatedly over the past few weeks, now you know why. The altcoin season index is currently sitting at 53, which is perfectly neutral. This means that Bitcoin and the major altcoins are moving in tandem. We are not seeing a massive rotation of capital from Bitcoin into the altcoin market, which is typically what happens at the end of a bull run. Instead, we are seeing a cautious market where capital is being preserved. Gold futures, by the way, are surging at $4,742, up 1.6%. And the options open interest has exploded by 354.88% to $37.27 billion. That tells you that the smart money is hedging aggressively while waiting for clarity. Let us shift gears and talk about the macroeconomic factors, because you cannot trade crypto in a vacuum. Tonight at 9 p.m. Eastern Time, President Trump is scheduled to address the nation regarding the ongoing conflict in Iran. The White House has promised important updates. Trump recently stated, and I quote, "I had one goal. They will have no nuclear weapon, and that goal has been attained. But we are finishing the job, and I think within maybe 2 weeks, maybe a couple of days longer, to do the job." The markets are already pricing in an end to the conflict, which is why we saw equities push higher and oil prices cool off to around $100 a barrel. The 10-year Treasury yield has dropped to 4.28%. However, there is a massive catch that the markets might be underestimating. Even if Trump declares mission accomplished tonight, Iran still controls the Strait of Hormuz. As one analyst put it, mission accomplished does not really do anything unless it comes with the reopening of the Strait of Hormuz. If the strait does not reopen immediately, the global supply chain and energy markets will remain constrained. This means we could see weeks or even months of the status quo playing out. If the market realizes that the conflict's economic impact is not over, we could see a sharp reversal in risk assets, including Bitcoin. So tonight's address is a binary event. Either Trump delivers something concrete that reopens global trade routes, or the market calls his bluff. Either way, volatility is coming. On top of that, today marks the 1-year anniversary of Trump's Liberation Day tariffs. The National Taxpayers Union has published data showing that these tariffs have not shrunk the trade deficit and have severely impacted small businesses across America. Auto tariffs have been sitting at 25% since April 3rd of last year. The Federal Reserve is also holding interest rates steady in the 3.5 to 3.75% range. Fed Governor Musalem stated today that monetary policy is well positioned to address risks to both sides of the dual mandate. The US dollar index is slightly down at 99.22, which is actually supportive for Bitcoin in the short term, since a weaker dollar typically drives capital into alternative assets. Now, let us talk about what the smart money is doing, because this is where it gets really interesting. According to CoinDesk, smart money is hedging Bitcoin more aggressively than Ethereum. This is a fascinating development because it suggests that institutional investors believe Ethereum might be more resilient in the short term. If this trend continues, we could see a bullish reversal in the Ethereum to Bitcoin ratio, which has been under pressure for months. Meanwhile, on-chain data shows that institutions have quietly accumulated roughly 63,000 Bitcoin over the past 30 days, while retail traders have been panicking and selling. Bernstein analyst Gautam Chugani wrote last week that Bitcoin looks bottomed, and the firm reaffirmed its $150,000 price target for the end of 2026. That is a bold call, but Bernstein has been one of the more accurate institutional voices in this space. Now let us get into the technical setups and triggers for the next trades. For Bitcoin, the immediate support level to watch is $66,218. If we break below that, the next major support is down at $64,000, which is a psychologically significant level. On the upside, the immediate resistance is $69,135. The 10-period exponential moving average sits at $68,188, and the 10-period simple moving average is at $68,359, providing short-term support near current price, but resistance builds quickly above that. The 20-period EMA is at $68,826. The 20-period SMA is at $69,792. The 50-period EMA is at $70,966. And the 200-period EMA is all the way up at $84,945. This tells you that the longer-term trend is still firmly bearish. We also have a massive $434 million short liquidation threshold sitting at $69,447. If the price pushes up to that level, we could see a massive short squeeze that propels Bitcoin higher in a violent move. So, how do we trade this market? Let us break it down by trader type, because the strategy that works for a scalper will get a swing trader killed and vice versa. If you are a short-term trader or a scalper, this is a market for range trading. You want to buy the support at $66,200 and short the resistance at $69,100. Keep your stop losses tight, no more than 1 to 2% of your portfolio on any single trade, because a breakout in either direction will be violent. Watch the order book for spoofing and fake outs around those key levels. The funding rate on Binance for Bitcoin is currently at 0.0018%, which is nearly flat, confirming that neither side has a significant edge. Do not get greedy. Take your profits at the middle of the range and live to trade another day. If you are a mid-term swing trader, patience is your best friend right now. You should be waiting for a confirmed breakout and retest. If Bitcoin breaks above $69,135 with strong volume and successfully retests it as support, that is your trigger to enter a long position targeting $72,000, with an extended target at $75,000. Conversely, if we break below $66,200 and retest it as resistance, that is your trigger to enter a short position targeting $64,000. Until one of those triggers hits, sit on your hands and protect your capital. The worst thing you can do in a chop zone is force trades. The market will tell you when it is ready to move. Your job is to listen. If you are a long-term investor, the strategy is completely different. You need to zoom out and ignore the day-to-day noise. The historically reliable 4-year halving cycle suggests that this current consolidation phase may stretch through the third quarter of 2026 before forming a durable bottom. Bitcoin entered April at roughly $66,500 after losing approximately 23% in the first quarter, its worst opening quarter since 2018. But here is the thing. After every major drawdown in Bitcoin's history, the recovery has been spectacular. Your strategy should be dollar cost averaging into the market at these lower levels. Do not try to catch the exact bottom. Accumulate slowly, move your coins to cold storage, and prepare for the macroeconomic shifts that will inevitably drive the next major bull run. Now let us talk about the global events that are going to shape the trading landscape in the coming weeks and months. First, the Iran conflict and tonight's presidential address. If Trump delivers a credible path to peace, expect a risk-on rally across all asset classes, including crypto. If the speech is vague or the market perceives it as political theater, expect a sell the news reaction. Second, the 1-year anniversary of Liberation Day tariffs is putting renewed focus on trade policy. Any new tariff announcements or trade deal developments could move markets significantly. Third, the Federal Reserve's next meeting will be critical. If the Fed signals rate cuts, it would be massively bullish for Bitcoin. If they signal rates staying higher for longer, it would add more downward pressure. Fourth, the Bitcoin exchange balance has increased by 5,070 BTC to 2.46 million BTC, which suggests that some holders are moving coins to exchanges, potentially to sell. This is a bearish signal in the short term. Fifth, the regulatory environment continues to evolve, with the SEC's stance on crypto being a key variable. Let me also highlight something that most analysts are not talking about. Solana, which has been one of the market darlings of the previous cycle, is currently trading at $82.97 with open interest of $5.09 billion, down 5.02%. This decline in Solana's open interest while Bitcoin's is rising tells us that capital is rotating out of higher risk altcoins and into the relative safety of Bitcoin. If you are holding altcoins, this is a warning sign. The market is in risk-off mode and altcoins tend to suffer disproportionately during these periods. Another critical data point is the Bitcoin exchange balance, which has increased by 5,070 BTC to 2.46 million BTC. When coins move to exchanges, it typically signals that holders are preparing to sell. This is a bearish signal in the short term and something we need to monitor closely over the coming days. Now, here is something that most analysts are not talking about. The CME Bitcoin open interest is at $7.17 billion, up 1.81%. This is significant because CME is where the institutional money trades. When CME open interest rises, while the price is consolidating, it often precedes a major move. The institutions are positioning themselves, and when they move, the market moves with them. So, to bring it all together, we are currently trading in a high volatility consolidation phase with a bearish underlying structure. The market is incredibly indecisive with longs and shorts evenly split. The macroeconomic environment is challenging with tight liquidity, geopolitical uncertainty, and a presidential address that could be a game changer. But despite all of this, the smart money is accumulating Bitcoin. the long-term fundamentals remain strong, and the halving cycle is setting up for the next major bull run. If you are a short-term trader, trade the range between $66,200 and $69,100 with tight stop losses. If you are a mid-term swing trader, wait for a confirmed breakout above $69,135 or a breakdown below $66,218 with volume confirmation. And if you are a long-term investor, dollar cost average, accumulate and hold. The market is a battlefield, but if you stay disciplined and trade on the facts, not on emotion, you can survive and thrive. Before I wrap up, let me share some additional risk management strategies that apply to all trader types. First, never trade with money you cannot afford to lose. This sounds basic, but you would be surprised how many people are trading their rent money on 50 times leverage. Second, always have a plan before you enter a trade. Know your entry, your stop loss, and your take profit before you click that button. Third, diversify your exposure. Do not put all your eggs in one basket. If you are long Bitcoin, consider hedging with a small gold position or a stablecoin allocation. Gold futures are currently at $4,742 and surging, which tells you that the market is seeking safety. Fourth, pay attention to the funding rates. When funding rates are extremely positive, it means longs are paying shorts and the market is over-leveraged to the upside. When funding rates are negative, the opposite is true. Right now, the Bitcoin funding rate on Binance is 0.0018%, which is nearly flat, confirming the market's indecision. I also want to address something that Bernstein analyst Gautam Chugani said last week. He wrote that Bitcoin looks bottomed and reaffirmed the firm's $150,000 price target for the end of 2026. Now, that is a bold call, and I want to be transparent with you. While I respect Bernstein's research, a $150,000 target from current levels would require a 119% rally. That is not impossible in crypto, but it would require a significant shift in macroeconomic conditions, including potential rate cuts from the Fed, a resolution to the Iran conflict, and renewed institutional inflows. The setup is there, but the catalysts have not arrived yet, so keep that target in mind as a possibility, not a certainty. Finally, let me remind you that April has historically been a strong month for Bitcoin. The seasonal tailwinds are real, and if we can hold the $66,000 support level through the first week of April, there is a strong probability of a relief rally into the $72,000 to $75,000 range. But if we lose $66,000, all bets are off, and we could see a retest of $60,000. The market is at a crossroads, and the next 2 weeks will be decisive. And one more thing before I go. I know the fear is real right now. I know it is tempting to sell everything and sit in stablecoins. But remember, the greatest opportunities in financial markets are born in periods of maximum fear. Warren Buffett said it best. Be fearful when others are greedy, and greedy when others are fearful. With the Fear and Greed Index having just emerged from 46 days of extreme fear, we are in that zone. The question is, do you have the discipline and the conviction to act on it? Thank you for watching Boni's Life. I hope this analysis has given you the clarity and confidence you need to navigate this complex market. If you found this valuable, smash that like button, subscribe to the channel, and turn on notifications so you never miss an update. Drop a comment below telling me what you think President Trump will say tonight and how you are positioning your portfolio. Remember, the market rewards the prepared and punishes the reckless. Stay sharp, stay disciplined, and I will see you in the next episode.